For the time being, let's turn our attention a little bit away from the equity markets and focus on the commodity space. Manisha Gupta is standing by to tell us exactly that. Manisha, take it away.
Thank you for that, Nigel. I'm looking at metals prices because we're looking at very strong gains continuing into this one, and the outperformance clearly coming in from copper, which is very close to its all-time highs. Actually, when you look at the COMEX prices, we're just about 2 cents away from its all-time high of $5.2 per barrel per pound there. So very strong gains continuing into this one. And interestingly, even as on LME, we've seen prices gain up by 13%, but in the COMEX, you have seen prices gain up by 28%. That's the kind of disparity that we have seen on prices, and is the reason you're looking at US copper premium at LME standing at $1,500 a ton there. Well, various supportive factors there. To begin with, it has been about potential US tariffs of 25% perhaps coming in copper, and that has led to a lot of copper being shifted from various other geographies into US. Apart from that, it also is about new stimulus measures coming in from China and more anticipated. And then the markets also are looking at deficit concerns. Almost everybody, all brokings and banks have talked about big deficit in this year and the next as well. The latest report comes in from JP Morgan, which is talking about a big deficit of around 3 million tons every year by 2030. JP Morgan also talks about all-time high prices in this year, and their forecast for copper for this year is $11,500 a ton. Not too far behind is zinc, which, by the way, is an underperformer in this year in the metal space until now, but it also has seen good gains in this week. It's trading at a 3-month highs, and we also are looking at reports coming in from Nyrstar Australia announcing a 25% output cut for the year, and then Alaska Red Dog Mine, which is 10% of where global zinc comes in from, also is looking to scale back because of ore depletion for 2025. The markets also are looking at unprofitable TCs, and that has led to lower production from China, down by nearly 7% in sense of refined zinc production for the year 2024. When you look at 2024 reports as well, it also will tell you that the global zinc output fell for a third straight year in 2024. If the demand starts to come back, then you are looking at zinc prices going higher. Also, when you look at the LME as inventories, LME zinc, high zinc grade inventories have declined by 74,000 tons in this year and stand at 160,000 tons. So everywhere that you look, you are looking at strength continuing in case of prices. One last table should show you on what we've done as this quarter ends in sense of many of these metal prices. These are LME prices, but let me tell you, copper is up 13% on LME. It is 28% higher in the US markets right now. Aluminum, 2.5% higher on LME. It's up 15% in the COMEX markets right now. So that disparity is quite huge as we look at LME and the US markets. Nickel is gained up by 5%. And remember, 25% of those tariffs have come in on aluminum and cobalt as well. So cobalt, which was an underperformer last year, is up 38% in this year. Zinc continues to be an underperformer, and we've seen tin prices gain up by 18% because of inventory declines and production concerns as well. So overall, metal pack slightly taken down by zinc, but otherwise doing quite well.
All right. Thanks a lot for that, Manisha.